Tyson Foods Incorporated should sound familiar to you. They're the world's second largest producer and manufacturer of chicken and pork, and the world's largest exporter of beef outside of the United States. They not only have their own products, selling fresh animal protein and frozen products, but they also supply major fast food companies like KFC, McDonald's, Burger King, and Wendy's, both domestically and internationally. Also, Walmart accounts for 17% of their consolidated sales. Although they have become a giant in their industry, Tyson started as a small family-run company, founded back in the 1930s by John W. Tyson in the Midwest. They made it through the Great Depression and flourished over the next decades, primarily as a poultry farm. Business boomed throughout the 1940s as chicken was not included in the rations during World War II, and Tyson steadily continued to grow over the next few decades. In the 1970s, they started to diversify their products from just fresh poultry to prepared frozen meals. By the 1980s, Tyson food craze spread internationally, expanding to Mexico and Japan. This was also when Tyson acquired their first few companies, which would eventually lead to a portfolio of over 20 acquisitions over the next 30 years, including a recent purchase of the big company Hillshire Foods in 2014 for $7.7 billion. By the 1990s, Tyson had spread worldwide to countries in Asia, Central and South America, the Caribbean, and the Pacific Rim. And by 1993, Tyson Food was selling more than 6,000 different products. Tyson Foods has grown into one of the most successful and largest food production companies in the world, but they didn't get there without cutting corners along the way. In fact, they have many skeletons in their closet, from severe air and water pollution to smuggling and employing undocumented immigrants to keep labor costs down. Over $1 billion in damages from price manipulation from their French meat divisions. False advertisements and the use of undisclosed antibiotics, employee abusement, and Tyson has its share of lawsuits and allegations throughout them. But despite all of those atrocities, Tyson is most widely known for their horrible mistreatment of animals. In 2004, PETA conducted an undercover investigation and filmed workers beating chickens against the walls, stabbing chickens in the necks, and urinating on conveyor belts. Live chickens were on the way to being slaughtered. I figured I'd spare you some gruesome images on this slide. Tyson Foods is essentially everything I hate in a company, so I was relieved to see that they have been making a lot of efforts towards ending hunger, helping education, the environment, and community development. I was surprised to learn that Tyson had set up a scholarship program for single parents. They created a hands-on apprenticeship and leadership curriculum for underserved middle school students in Chicago, and even recently donated $500,000 towards watershed restoration and conservation in the Midwest. What's most impactful is their huge effort towards hunger relief. Since the year 2000, Tyson has donated over 9 million pounds of food to food banks. The sheer magnitude of this type of corporate social responsibility is astonishing. So, why Tyson Foods? They've managed to become a powerhouse in their industry and remain extremely successful despite all the feather ruffling, pun intended. What interests me the most is how they will fare in the future. With industrial animal production acting as a huge contributor to greenhouse gas emissions and climate change, animal protein consumption needs to be limited. The trends and emerging issues are moving towards plant-based proteins, insects, and cellular agriculture, with a rapidly shifting perception of animal protein and its environmental impact. With the inevitable changes ahead, how can Tyson stay afloat? What types of changes will they make? What changes have they already made? As a major player in the industry, they have an opportunity to champion the movement away from industrial farming and shift the future of protein consumption in America and worldwide. So let's take a look at the numbers and see what they've been up to. Here's the income statement. We can see that gross profit margin has been steadily rising, which is always a good sign of company health. Operating expenses have also been rising slowly. There's definitely a lot of activity in SG&A. Looking at the balance statement, over the last 3 years, there was a couple of numbers that stood out to me right away. Let's start with assets. Property, plant, and equipment is relatively low for such a huge company. Well, it turns out that Tyson actually doesn't raise their own livestock. They have breeding facilities, but they contract independent farmers for raising animals. Besides these breeding facilities, Tyson's only PP&E includes slaughterhouses, processing and packaging plants, distribution centers, cold storage facilities, R&D labs, and their headquarters. Looking at the cash and cash equivalents, you can see that from 2015 to 2017, cash has decreased by almost half. Total assets have gone up by $4 billion over the last year. It looks like goodwill also made a giant leap from $6.7 billion to $9.3 billion. And at the same time, both long-term and short-term debt has soared. This leaves me with some questions. Where has their cash gone? And what caused for the increase in total assets and goodwill? Now that we've looked at the financials, let's dig a little deeper at the numbers and try to figure out what's really going on. As mentioned before, Tyson's gross profit has been rising, and they sit at a gross margin percentage of 13.29, which isn't too bad. But compared to their two biggest competitors, Pilgrim Pride and Hormel Foods, they sit slightly below each one and quite a bit behind Hormel. How about their return on assets? This is an indicator of how profitable a company is relative to the total assets. At only 7.19%, it doesn't seem that Tyson's doing too well. So let's take a look at the competition. And we were right. Pilgrim Pride and Hormel Foods sit way higher than Tyson. As mentioned earlier, Tyson has a lot of liabilities, and their assets went way up. So, compared to the rest of the industry, they seem to be doing relatively average. Tyson ultimately has a lot of inventory to turn over, and inventory that spoils. So, at a ratio of 11.09 as their inventory turnover rate, how do they compare to the industry? It seems that they're actually doing really well. They sit leagues above the competition. Those frozen chicken nuggets must be flying off the shelves. Tyson owns a lot of companies, and it seems that they have no plans of slowing down growth. This explains their high debt. By the end of the fiscal year 2017, Tyson will have sold all of their non-protein focused businesses. All of the expenses from the sales are showing up in the SG&A. In the summer of 2017, Tyson made a purchase to the company Advanced Pierre Food Holdings for about $3.2 billion. This explains why cash has gone down so drastically, because they paid with cash. But along with the acquisition of Advanced Pierre, they also acquired their debt, which explains why goodwill has skyrocketed. So now that all the numbers make sense, where does that leave Tyson now? What do they have planned for the future? And how can they keep up with an industry that has no choice but to change? As their commitment to innovation and growth, Tyson has launched a venture capital fund called Tyson New Ventures, LLC, to invest in new technologies, business models, and sustainability. It already has $150 million in the fund, and their focus for investments are alternative proteins and business models to reduce food waste. In fact, they just invested more money into the vegan alternative protein company Beyond Meat. They already had a 5% ownership from last year. It seems that although Tyson is a monster in the animal protein production world, they have a lot of stake in the future, and they're taking steps towards the right direction to make an impact on the world. They have an opportunity to make a real impact on the industry and how it approaches animal protein, and ultimately could make huge changes for our environment in a very positive way. With their investments in alternative proteins and innovations, I hope to see that they continue to move in this direction. Thank you, and thank you so much, Marty. This was a great class.